Hello, traders. Gary Wagner with the gold forecast here. Approximately 5 a.m. in the morning on Thursday, November the 4th in Honolulu, Hawaii. That means it's an active trading day over in New York, and this is the daily report. Wow. Forex gold, cash gold, COMEX gold, all substantially higher this morning. Spot price up about $35, $34.70. Currently trading at 1382 to 1383. We are on record highs right now for the day as we go and attempt to take out this all-time high at 1388. What a difference a day makes. On today's report, of course, we pulled profits yesterday in the market. We went ahead and re-entered the market immediately. In hindsight, that was the call to make. We now have a scenario where quantitative easing 2, the market itself needed a day to absorb it. We got this huge knee-jerk reaction. We'll talk about that a little bit later as we look on an intraday chart. This is going to be an interesting day, an interesting end of the week. We'll talk about our strategies all here on the daily report. Traders, I expected a wild ride, and we are absolutely getting it this morning. As you can see, just as we are taping this morning, we went up to test these all-time highs. By the way, currently we are looking at a 30-minute candlestick chart, compressed. But as you can see, we ran up to there, and just as quickly did we find some selling coming into the market, whether it's profit taking on a short-term basis, and currently we are trading at 1378.60. The tell of the tape, this is really an indication of that knee-jerk reaction that I was talking about. When we take a look at the activity, of course, this was going into the announcement on Wednesday. This is that profit taking just prior to the announcement on Wednesday. It took it to a low, as we talked about yesterday, 13.25, and then after the announcement there was a little bit of indecisiveness at first. We of course re-entered the market right in this area. Traders, you should have gotten in right around I would say 1345, somewhere in this area, and your stop of course is sitting at 1320 right now, and the market just took off running. You can see it forms a couple of bases, one small base here, then takes off running, another small base here at 1355, then takes off running, a small base here, and then takes off running. Small gap right in here, very, very interesting. You rarely see that in the Forex at all because of the continuous market itself, but we've got an incredibly volatile day. But it is a volatile day to the upside, and that's what we've kind of been betting on. We have been looking at this market right now, as far as I'm concerned, to take out these record tops, 1388. My belief is that we are headed towards 1400 plus in gold. So traders, where are we going to find potential resistance in this marketplace? Of course, as we reach record tops, the only thing that we can actually do is look at a thing called Fibonacci projections. Right now, as we trade, you can see this is going to, I think, give us a little bit of resistance right in here. But I feel without too much trouble, we should be able to take those tops out. At that point, I've put a couple of calculations up that I've had for a while sitting here, but I typically don't show this part of the screen. But what we're looking at is when we consider, this is where I'm projecting our top to be. This is that 1422, and that's based on wave 1 and wave 5 being equal. However, there's a very, very good friend of mine, another Elliott Wave technician, David Bannister. He also writes for Kitco. and he's projecting much more solid highs. He's looking at around the 1488 point as a potential top to this last and final wave. He's a very, very good trader, so I absolutely want to pay note to it. As I was talking to him the other day, and he mentioned that to him, I said, in this case, I very much hope that that you're absolutely correct, and I've underestimated it, because in both cases we're long this market, so that it could be a very, very good trade. But in terms of different areas, I think that you're going to see any kind of let's call it resistance. The 61% is at 1380, and that seems to be where we stalled right in here right now. If we take a look and kind of draw that over, that seems to be the resistance area that we're looking at right now currently. The next point is going to be 1396. And then, of course, this 1421.22. So I think that you're going to see, if we do get resistance, these are the areas that we're going to get it in. As you can see, we've gotten a little bit of resistance here as it's backed off the highs. I don't think it's going to have much trouble going through. Then 1396 and then 1422. So strategy. Obviously, the position that we took on yesterday, we do want to maintain. We also want to maintain our stop at 1320. We'll look to move that up later. Right now is not the time. I do expect some wild gyrations in the market. As I talked about, we looked at the QE2 in terms of the anticipation. It was believed that anything over 800 billion would be an aggressive stance over the next year in the marketplace for quantitative easing, purchase of bonds backed by our Federal Reserve. The report that came out yesterday was 600 billion, but over 8 months. So that's a little bit actually more aggressive than originally cited, and therefore you're seeing this big kick in the behind, so to speak, to the dollar vis-a-vis gold, moving up strongly. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review, and oh, what a week it's been.